If you have an IRA or a 401k right now, and you're no longer employed in your 401k, if you have an IRA, you can convert it to a Roth.
Right.
And here's the difference between the two. I always give this simple example. Here's the difference between an IRA and a Roth IRA, okay? Tax deferred versus tax free. I said, forget about money. I tell every single event I've ever done at our learning lounge, our learning center, I always say, listen, forget about money. We're gonna forget about investing in mutual funds with our seed money. We're not gonna invest in stocks, bonds, mutual funds, or real estate. We're gonna take seed money, and we're actually buy seeds. We're going to plant the seeds, we're going to grow crops. Okay, and there's basically two kinds of crops. There's probably different spin-offs in the middle, but there's basically two different types of crops. The one crop, you know, you buy these red seeds, tax-deferred seeds, and every time you buy those seeds, you get a tax break. And that's really good, because if you can save the money now, it'll grow tax-deferred as well. So you get a tax break, and as the seeds take root and they grow tax-deferred. And that's been told to us as being a really good thing forever and ever, right? Because when you get to retirement, as you know, we'll all be in a much lower tax bracket. And that's just the story. Right. Well, that's the story. Anyway, when you get to retirement, you know. So most people did that. You know, it's called the IRA, and these seeds came out in like 1974-ish. And then in 1980, we came out with these new red seeds. Every 2 weeks, we'll take them out of your paycheck. You get a tax deduction. Every 2 weeks, the company would match some of it. They get a tax deduction. They all go into the red, you know, the red trees, and they all take root, and they'll grow tax deferred. And so all of that money, when you think about it, these red crops, that's your tax deferred money. Okay, it's your 401k, it's your IRA, it's your 457, it's your 453. 403B, and it's your TSP or thrift savings plan. I'm sure I'm missing a couple others. Anything that you got a deduction on, tax deferred, means you are willing to get a deduction on the seed, and you're willing to pay taxes on the crop.
Yeah. On the harvest,
at some future date, at whatever the rate is.
Which you don't know.
Which you don't know.
Right.
We know what it is today.
Right.
It's the lowest it's ever been. Like in 50, 60, 70, 80 years even. Maybe 80 years right now.
Right.
And we just got a break. We just found out the other day we're getting another break in 2024. Taxes are going down again. Makes no sense to me. Or, so you can have this big crop of money that you've never paid taxes on. Never paid taxes on it. And you got to take the money out. It's not like you can keep it in there forever. You got to start taking it out at 73 now, I guess is the age. It changes every year now. You got to start taking that money out at 73. It's called the required minimum distribution. Guess what? It comes out as ordinary income. That's not like other assets or other taxes. So that gets added to your other income. And that means you can start paying stealth taxes on top of it. And it goes on and on and on. The point of it, if it's in the red, you got no idea what you have to pay on it. And it's going to be the highest tax, most likely, of any assets that you own. Now, the Roth IRA, conversely, works like this. And it's very simple. You pay taxes on the seeds, you get the crop for free. You get the income for free. If you don't take it, it grows tax-free. If you do take it, it's not reported as a taxable thing that creates your Medicare to go up. It passes on to children tax-free. They can keep it inside of the IRA for multiple years after you pass it on to them tax-free. And whereas the red trees are can create a lot of problems. So we look at tax-free money and taxable money. Red, if you're in the red, that's generally pretty bad, right? And if your gut money's made out, money's green, right? So if it's tax-free is always better. And so what we found, and the reason we created our tax firm was, we found that most people have a tax preparer or a solution for tax preparation and almost no strategy whatsoever for how to mitigate future taxes. So we created a tax team. I couldn't even find one for myself. So I said, the heck with it. We'll go buy our own, hire our own CPAs. We've got full-time CPAs, full-time certified financial planners. They work with our investment advisors. They work with our insurance agents. And we all make sure that everybody gets a tax-efficient investment strategy and retirement income strategy using annuities and life insurance.